All right. Good evening. Good morning. Hello, everyone. Thank you so much for joining me on this stream. We're going to be talking about 20 cryptocurrency tips and tricks, what I wish I knew when I got started with crypto. So before we get started, just want to make sure that the noise, the volume is good. You can hear me okay. And tell me where you're from. Where are you guys coming in from? Where are you watching this from? Let's see if we can't get an equal distribution around the world. I know it's kind of late for some people. It's kind of early. So yeah, I really appreciate you joining me. I'm going to try to make this quick and easy and painless. This should be kind of fun. So we should be done probably before the end of the hour. But yeah, we're just going to go through the quick presentation, and then we'll get to your questions and answers. So I plan to make this about an hour, but we'll see. All right, cool. So we've got people from Venezuela, Croatia, London, hey, California, Dublin, New York, very cool. Florida, is that Austria? Wow, very cool. Houston, Texas, Serbia, awesome. More England, awesome, guys. Welcome, welcome. Tel Aviv, very cool. A couple people from Israel. Netherlands, Perth, wow. Canada, oh my gosh, you guys are all over the place. This is great. All right, so we'll get into this. First thing I got to cover is I am not a financial advisor. I'm not a CPA. I'm nobody other than just a guy on the internet telling you fun stuff. And please don't take this as any sort of financial advice or anything like that. It's this is just, entertainment. This is me talking about cryptocurrency, and should definitely not be construed as financial advice, life advice. I'm trying to help you out here by showing you some cool stuff, but please don't take my word as law. Like, you're responsible for what you do with your own money. So just got to make that clear, got to put that out there. That's just kind of the nature of the game. One thing I will be I have to be persistent on is that I won't comment on your portfolios or anything like that. I can't give you financial advice, so just be aware of that. So I do want to say thank you to our premium members for joining us, especially those who are here late at night or early in the morning. You guys are awesome. Thank you so much for joining me tonight. And so, yeah, like I said, we're going to be getting about 30 minutes of content or so. I haven't really timed this out, so we'll see how how many tangents I go on. But it should be fun. It should be very, I want to make this kind of a light presentation. I don't want to make this too serious. I put in some fun images and that kind of stuff. So hopefully we can have a little bit of rapport. I'm not going to be really reading the chat while I'm presenting. So if you're asking questions, just please hold them till the end, because otherwise I just won't see them. So yeah, we'll get into the presentation. Like I said, I can't comment on your portfolio, but I will answer other questions about coins and stuff at the end. So just wait for that. All right. Like I said, getting into the presentation, the 20 things I wish I knew before I started cryptocurrency. So tip number 1. Read the white paper. And that's basically one of the best tips I can possibly give you, because so many people don't do this. It's crazy to me how many people try to understand a project, try to speculate on a project, and they don't even understand what's in the white paper, what the project's about. That one blows my mind, because white papers, yes, they're a very diverse read. They they're all over the place in terms of being very simple, very complex, very technical, very marketing oriented. But the thing is, they at the bare minimum will always tell you what the project's about, what it's trying to do. Even if there's a lot of fluff in there, you can kind of, as you read more of these white papers, you'll get sort of a sense of almost the BS detector. You'll be able to become a more effective cryptocurrency investor, trader, whatever. You'll be able to say, no, I've read the white paper for that project. That project's crap, or oh yeah, I've read that white paper. That one's really cool. I like what they're doing, and that because you read the white paper. And again, I can't tell you how many people don't do this, and it just blows my mind. So one thing I do want to stress is that every white paper should tell you exactly what kind of problem it's trying to solve and how they plan to solve that problem. Maybe they can be a little bit visionary and say, oh, we're trying to solve this really, really big problem and we're trying to do this in an iterative process. And, this is a 10-year project and it's going to take some time. So we're starting with these things. And that's okay. So long as they aren't saying, we're going to solve world hunger with blockchain or something like that. Like I want to see a project that's grounded in reality while, trying to be ambitious. That's the sort of the two pillars of what I look for in a project. Something that is realistic, but also, they want to solve something. They've got a dream, they've got a vision. So that's really cool. Another thing you really want to see in a white paper is how they plan to implement their token, what the token distribution is. Is it fair? Generally, I want to say something around, I don't know, 30-40% public distribution, maybe higher than that. You can kind of play around with that. It's kind of a subjective thing. But the thing is, you should have an understanding of what this project is and how they're planning to implement this token. And I'll cover this in a little bit. Why they have a token? That's another question that I think so many people don't ask. It's all well and good for them to be using blockchain and be, trying to do more with this space and solve some really cool problem. But if they can't tell you why they have a token, why they have, why they're using a blockchain, that just doesn't do it for me. So I want to make sure that they have it. So, okay, I don't want to harp on this point too much, but again, read the white paper. It will solve so many of your issues. It will make you just a more informed person when it comes to cryptocurrency, and you'll be able to, impress your friends or impress other people with your crypto knowledge. So, okay, we'll move on. The next point is learn how to avoid scams and schemes. This is another big one that I think people have gotten a little bit better at, especially as we went through the whole BitConnect cycle. And, it's just, I think the bear market has really helped make people more aware about how people are going to take advantage of you. This is a confusing space. It's a new space. It's very technical. So people are obviously going to try to get into that and try to take advantage of you. And, people are going to be trying to take your money. And I think I just read the statistic the other day of like $1 billion has already been hacked or stolen in 2018. And that's just crazy. That's crazy to me because security itself is not that complicated when it really comes down to it. It is really more than anything just a mindset. I like to make this sort of comparison. It's like you build a castle and you have like a moat and you have guards and everything, but you leave the front door open and, security is a mindset. You have to think through these things and think through like, what is an attacker going to do? How are they going to try to take advantage of me? And, where am I weakest at? And so combining that with multiple layers of security is a really good idea. I think the common rhetoric people say is, if you don't own your keys, you don't own your crypto. And that's very true, because if you're storing your crypto on an exchange, you are trusting them with the security of your cryptocurrency. You are giving them basically the biggest right or privilege of owning cryptocurrency, which is, you are your own bank. And so, sometimes that's okay. In cases like Coinbase, they've got insurance for both your fiat and crypto deposits. So that's pretty cool. But generally, most exchanges are your SOL if they get hacked. So instead, learn to take ownership of your crypto assets, especially if you have lots of them, and invest in something like a hardware wallet, or learn about something like two-factor authentication. I like to use Authy instead of Google Authenticator. I think it's a little bit better of a program. There's also like multi-key configurations and stuff like that. There's just like a lot of rabbit holes you can go down with security. But again, security is a mindset, and it's always staying skeptical. It's always staying, one step ahead of those guys that are trying to take advantage of you. The most common way people lose cryptocurrency is through stuff like phishing, where people take advantage of your relative, you see some sort of email from Binance and you're like, oh, okay, I'll click on this. Yeah, sure. I'll give you my password. No problem. And next thing you know, they've got access to your account and where's your crypto and stuff like that. It's just, you need to be aware of this kind of stuff. By the way, guys, can you read the text on the PowerPoint there? I can kind of make that a little bit bigger. Yeah, that will probably help. Okay, cool. As much as you want to see my big face, I want to make sure you guys can actually read what I'm talking about. Okay, so let's move on. Now, moving into, again, another kind of mindset thing, but this is one, I think, the number one issue we see with traders in terms of, or just people who get into the space in general, is that, they say something to the effect of like, hey, I got in this position a couple months ago, I got into this coin, and it's pretty far underwater. What should I do? And really, the solution to this problem, which is basically the number one issue we see with traders and investors, is do not place a live position in the market without first defining what your exits are. This is known as the number one rule of risk management. And risk management is probably the driest topic other than security in crypto, unfortunately. But it is so essential to your ability to continue to be profitable in the space, continue to be solvent, continue to be able to participate. It's not fun when you're lost a lot of money and you say, okay, I'm done, I'm out of this, and you lose this ability to participate in a really exciting and groundbreaking space because you didn't define your exits before you got in. So this is so important because, guys, when you get into a trade, when you get into investment, you don't get any smarter, okay? When you're midway into an investment, when you're midway into a trade, and you're trying to make decisions on the fly, you're not making those decisions from a basis of logical reasoning and anything like that. You are doing it based on emotion, and you're gonna fly by the seat of your pants. And unfortunately, that's how you make those mistakes that you say, geez, why did I do that? If only I had thought this through a little bit more, and if only I had, considered what could have happened, or just a lot of things. So it goes both ways. Learn to define your exits before you get in. So if you're starting to take a loss on a position, learn to get out. And if you're starting to be profitable, learn to play with profits, learn to take some off the top. This is something I think a lot of people who got in prior to December 2017 wish they had thought through more, saying, hey, if Bitcoin goes to this price, I'm going to get out. If it goes down to this price, I'm going to get out, and I'm going to do that in 10% intervals or whatever. It is your plan. It is your strategy. But just by having a plan, just by having a strategy, you are ahead of 90% of investors out there. So just, it's a mindset. This is the easiest thing you can do, but it's also the hardest thing because you have to really keep yourself honest to this and, make sure that you are doing it. So, I can keep going on about this, but we got to keep moving on here. So the number two rule, or, the number two issue that we see is relating to people just take out way too big of positions. They take out, again, this is continuing on risk management, but this one is known as the golden rule of risk management. And essentially what it boils down to is do not risk more than 2% of your account per trade entry. And so what does that really mean? Well, it means that you're taking small position sizes. You're playing with, small amounts so that, you don't have this giant, huge portfolio position that, is suddenly up one day and then down another day, and you don't understand what's going on, and you've got too much going on at once, and it gets confusing, and you get locked into that, and your emotions start going crazy. Instead, play with 2% positions. Be a lot more didactic with your entries, so that you are more capable of playing with profits, You can better counter fear and risk, and you can better diversify your portfolio. There's a lot of reasons why you want to be playing with this rule. And the reason it's called the golden rule of risk management is it's sort of the Midas touch of, investors or traders, because once they start to incorporate a rule like this, they, get to the next level. This is what kind of separates your average retail trader from a more professional trader. So definitely take this one to heart, learn about it some more, but this is one that I definitely recommend. So moving on here, this is another one you'll see people say all the time. It's almost like one of those things you can like write on a lunchbox or something like that. I don't know, but it's so true. It is so true, guys, because when you invest more than you can afford to lose, you become married to that position. You become married to that project or whatever you've invested in, and you become defensive, and you get upset, and you stay up late at night looking at your phone, like scrolling through Blockfolio or Delta and saying, oh man, if only this could go up or down or whatever. It's just not fun to be in that position. Guys, please do not invest with money you can't afford to lose. Do not invest with money that is for rent or groceries or anything like that. Crypto is so risky, and we've definitely seen that in the past 10 months. But especially as we get back into maybe a bull cycle, whenever that is, guys, don't go through this sort of cycle again where you're throwing too much money in and then you're panicking and you just, it's eating away at you. You don't want to be in that position. You want to be the guy that is cold and logical and, can make sound decisions, because, it's money you don't care about. This is money that you've set aside after everything else has been taken care of. You could literally light this money on fire and it would be okay, because that's what it means to you. So if you're not comfortable with that, if you can't do that in your mind 100%, then crypto isn't for you. And maybe just take a break until things start to warm up again. I don't know, but guys, if you can't if you can't operate in that way, I'm sorry, but this is too risky of a space for you. Stick to something a little bit less risky, like stocks or even bonds, or just minimize your positions. That's another way to really cut back on the risk factor and the panic factor and the anxiety factor. So this makes you a better investor 100%. Just make sure you're not investing with money you can't afford to lose. So moving along here. Understand FOMO. Oh man, this is a big one. We definitely saw last year around this time. So FOMO is fear of missing out, and I think this picture is such a great representation of what it is. So many times, especially as coins start to skyrocket, moon missions and all that sort of stuff, you see people jumping in right at the top, and then suddenly it starts to crash, and they wonder what happened. And that's because it is so hard to see a coin, a project running away, and for you to be, left at the starting line, not on board, or, you don't have enough in it, so you got to put more in. And, guys, I get it. It's such a powerful force. It's so part of being human, is seeing stuff like that get away from you. But the point is, the point I want to make to you is that there will always be other opportunities. There will always be other days where you don't have to jump on something that is just going completely parabolic, because so many times you're going to get into something like that and it's going to reverse on you and you're going to be stuck, holding bags. That's what it comes down to. So instead, just, you got to play with your positions a lot more, intelligently than that. And you definitely don't want to be jumping into something on the basis of FOMO. So understand how it affects you, understand how you operate under those conditions, and learn how to counteract that. And better yet, learn to be a contrarian to what other people are doing. So if people are FOMOing into something, maybe go short, or take a position where you're going to buy once it corrects or something like that. Learn to be the one who goes against the trend, like the guy in the picture here who's driving against the trend. So moving along, kind of similar to that. Don't chase pumps. And pumps are these sort of microcosms of, if somebody or a group gets in on a coin, typically it's a smaller coin. For example, last week we saw Moda or MDA or whatever, the loyalty points one that went completely upwards and then completely downwards. Um, you know, that is not what you want to be operating under. That's not what you want to be chasing. We've definitely seen that stuff kind of go away as governments have started to crack down on pump and dump groups and things like that. But it's still out there. Crypto is still, a space that operates kind of in that nature. So just be aware of that. If you see something on the top gainer ranks or whatever, just stay away from it. You know, you got to be more intelligent than that. Just don't chase pumps. I can't say it enough. All right, so moving on. You will miss out on moon missions. And this one is kind of a hard pill to swallow. I think, especially for people who are just getting in and are under the impression that, Bitcoin will make them overnight millionaires, or, they just read that hot tip on CNBC and, they're going to operate on that, Ripple to the moon and stuff like that. And, there are times where you'll be exactly right and you'll get in something and then it goes up and you feel so good. It is awesome to be, right in the middle of the storm when, you bought in before it started to rise or whatever. And that's awesome. But at the same time, like I said earlier, you will miss out on these pumps. You will miss out on, these parabolic swings, and that's okay. It's okay to miss out on these things. You won't get everything right because, not everyone can know everything. That's what it really comes down to. There's always things going on. Crypto is always open. It's always exciting. There's, even in a low volatility environment like we're in right now, there's still things going crazy. And, there's still, coins going up and down all over the place. So there's still opportunities to make money. There's still, you're still in the right place at the right time. We've still got years of, things going, I don't know. It's fun. Crypto is a lot of fun, but again, don't beat yourself up over missing out on, these big opportunities, or, if you sold out of something and then a month later it goes upwards, that's not your fault. You can't predict the future. No one can. Just do the best you can to sort of anticipate it. So, it comes down to research. So kind of similar to that point is everyone loses money. And, this is something that I don't think enough people admit, but it is so true, especially in crypto, because, this is it's a tough space to trade. It's a tough space to invest in. It's so volatile, things go all over the place, and that's why I want to make very clear that, like, even these professional traders or investors, even I have lost money, and it's okay. That is part of the process. It is a learning experience. You learn so much from, I really believed in that project and it just didn't, pan out. And it sucks, but that's okay because there will always be other opportunities. There will always be other projects to invest in. It's okay to lose money, just try not to make a habit of it. And again, this comes back to the rules of risk management that we covered earlier is, you want to limit your risk exposure. You want to limit your loss of money if you can. But it's inevitable, especially in a space that moves as fast as this one does. The next thing is diversification. And, why that's important is because this space is so speculative. We're starting to see it move in more of a utility value valuation type market. The market is definitely maturing. We're definitely seeing a lot of these projects that don't pan out just kind of disappear, and that's good. It's good, but we're still years away from the true utility value of the space. We are still, definitely in a transitory period. This is definitely the metamorphosis years of crypto. So I won't believe anyone who says, Ethereum is going to be the number one. There's no other, I wouldn't even consider any other platforms, or, I don't know, Ripple for forever. It's the only one I'll ever invest in. I don't care about any other project. You know, guys, this doesn't make sense. This is it's sort of the monkey brain mentality of like, I am married to that project and I will not accept anything else because it's the only project for me. And look, I get the enthusiasm, I get the excitement. It's fun to be all in on a project and to be right, especially when that happens. But at the same time, you are exposing yourself to so much risk by doing so. You are taking on kind of unnecessary risk because your inability to diversify. And maybe you'll be right. Maybe you'll get the one that goes off to be the next Apple or Google or whatever. But what if you're wrong? And so that's why I need to temper your expectations. Make sure you make diversifying your portfolio a priority, because otherwise you get stuff like this, the image there of BitConnect, which you can clearly see was not one you wanted to go all in on. So we probably won't see too many more examples of coins like that, especially coins that enter the top 10. But it is definitely possible. These projects, as much as we want to believe in them, can very well fail. They are startups. I think the statistic is like 70% of startups fail within the first year. I don't know, something like that. And certainly with ICOs, it's even higher. I think it's something like 80% don't even make it to exchanges or something like that. Guys, it doesn't really matter what the percentage is. It's a very high number. And that's why you want to make sure that you are limiting your risk exposure by, branching out, finding different projects. I get the notion that you want to, believe in Ethereum, but why not hedge your bets by investing in some other platform coins? So that comes back to research and understanding what your coin is, but also what its competition is. So again, this is something that we can definitely keep talking about forever, but make sure it's a priority. Contrary to that point, though, sometimes diversification isn't the right move. And why I say that is because sort of the stuff I was talking about in the last point, sometimes it is a good idea to manifest a lot of your holdings in certain coins. You can definitely limit your risk exposure by making sure that your portfolio skews towards larger coins. And that seems pretty obvious, yes. But I think a lot of people get under the notion that they have to invest everything into these little micro caps, and maybe they'll get lucky and they'll get the lottery ticket and it will explode, but a lot of times it won't. And that's bad. So make sure that when you're diversifying your portfolio, you're doing it intelligently. You're breaking it into pieces that have function. Make sure that a large block of your portfolio is devoted to the very solid, stable, coins that you can bet on, the ones in the top 10, for example. Then a smaller portion is towards those mid caps that have potential to break into the top 10, maybe not, whatever. And then just a very small percentage of your portfolio into small caps and ICOs. You want to limit that risk exposure because, those are the coins that are the riskiest, but, could potentially have, it's a high risk, high reward scenario. So again, I could go on and on about this, but we'll keep moving along. So kind of similar to that is understanding how to perform fundamental analysis on a coin. And this goes back to point number one, which was read the white paper. And that is a big piece of it. But it's also understanding things outside of the white paper. It's also understanding how this coin's community is going and their partnerships and what they're building and their roadmap and how well they're doing on it and their team and a lot of other things that are just seem like they're minutia, but actually are very important to the success of a coin. It is very important that we see not just vision, but the means to make it happen. We want to see, excitement in the community, that it actually has a community. We want to see that people are embracing the vision of this coin, this project, because otherwise, it's all well and good to have, something amazing in a vacuum, but at the end of the day, it's in a vacuum, and if adoption is the key goal, That's not going to happen if there's no user base. So, yeah, it's very important that you understand what's going on. And furthermore, understand sort of the different sectors out there. So many times I see people say, oh, yeah, that project is going to change everything. It is going to be blockchain's killer app. And I'm like, okay, let me check that one out. I read the white paper. This is just a Facebook clone using blockchain, and you have to pay to use it. So what's going on here? And so many times I see rhetoric like that where people are like hyping this project up, and I look into it and it says there's not much there. So having the ability to actually do the research on your own and understand what's going on and what the difference is between a lot of these projects, because quite honestly, there's a lot of different use cases of blockchain. So understanding a lot of them will really help you sort of categorize the different projects out there and really understand what the difference is between them. So I think that's really critical. I think it's one of the best ways that you can guarantee that you're making solid, guaranteed investments is by understanding what you're investing in. So that's it should be pretty simple, pretty straightforward, but not a lot of people do it, and it really surprises me on that. Kind of harping on that point, take your time and do the research. Do not, like we said earlier, FOMO into something just because it seems like a good investment, just because people are hyping it up. Take the time, think through your investment, think through, do these people, does this project deserve your money that you worked hard for? This is something you got to take seriously. And I understand that it is like crypto is fun and exciting, and it's great to jump on the bandwagon with some coin that is going to go to the moon. But at the same time, you got to take the time to do the research. You got to take the time to understand what's going on with this project, because so many times I've seen projects that look really good on paper, but if you actually take the time to understand them and what's going on with them, there's really not a lot of substance there. And so you got to be able to make that logical leap. You got to be able to make the sort of analysis leap to say, okay, this is what's going on, but this is what I'm actually seeing. This is where I think this project is going, and maybe it has potential, but there's some big caveats. So yeah, I think this image is a perfect way of demonstrating that. So anyways, moving along. Another thing I see people kind of strangely, make a big deal about is day trading or trading in general, or this sort of notion that if you understand TA, you can predict the future, and your word is law. And as we found so many times, TA is not a tool for predicting the future. TA is a tool for making decisions. And so that I think that's a big, misunderstanding that a lot of people have. Traders are very intelligent people who utilize charts and TA to make decisions. But at the end of the day, they are just as capable of predicting the future as you are, which is not very well. So, they can definitely read market trends. It's about understanding the price and the market trends and using some indicators to make good decisions. But at the same time, you can't expect to become this sort of master trader that is able to turn $1,000 into $100,000 in 3 days of trading or some crap like that. There's definitely some limits here. It is definitely it's definitely a hard market to trade, and there's still potential. There's potential for people to make intelligent trades, especially this market is very emotional. So if you see some sort of big piece of news and you're able to act upon it before a lot of other people are, sometimes you can do pretty well with that. But yeah, I would not get under the impression that trading is going to make you this super millionaire overnight. At the end of the day, I think it's much more pertinent for you to understand how to be an investor first, and sort of the parameters around that, and then build your trading education on top of that. And so that's kind of what Doc and I tried to make very clear, is that it's not some sort of magic. We're not doing some sort of tea leaf reading or whatever. this is it's there's a science to it, but it's also an art. So make sure that you understand the difference between substantive information and someone who's speculating based on what they see in the charts. So moving along, one thing I do want to kind of stress to you as a tip going forward is that I think in 2019, and this is just my personal opinion, but I think legality and sort of the regulation surrounding crypto is going to become one of the most important facets of how the space grows and how we see the market sort of evolve and mature. And I think a big piece of that is security token offerings, or STOs. No, they're not the one size fits all solution to your investing troubles or whatever. That's not at all what I'm claiming. It's definitely going to be a piece of the market going forward, a space that I think more people need to know about. And so that's why I included it here. But yeah, I definitely see it as sort of this iteration upon what was the model of the ICO, which just really hasn't done very well recently. The ICO, unfortunately, it's a great idea in principle, but it faces some regulation and legislative issues, and I think that's kind of what the STO is built to solve. I think it kind of combines sort of the regulatory the IPO with an ICO into one, and I think that's why I call it ICO 2.0. But yeah, it's definitely something that I recommend you look into and understand, because I definitely think it's going to become more and more of a thing people talk about in 2019. Certainly we saw today, Polymath absolutely killed it. And you've got other projects like PrefLogic, which are about to go to market. So it's really exciting time. NASDAQ is going to be launching a security tokens exchange to trade them. So it's definitely something that hasn't manifested itself just yet. It's definitely in those early stages, kind of like the ICO in like maybe 2015. But it is definitely going to be something that people are going to be talking about. It's definitely going to be something people are making money in. So definitely check it out, be aware of it. And yeah, that's my piece. All right, moving along. Another thing I want to stress is, and I don't know why I have to make this point so often, but I do. Market cap is definitely more important than price. And yeah, you guys are probably smart enough to know that. But I just want to make sure that people understand it, because when people see Bitcoin at 6,000 whatever and Ripple at under $1, they assume that Ripple is some big deal, or it's a steal or whatever. But the fact of the matter is, we measure coins by market price, or sorry, market cap in the crypto market. So it's not a really complicated point, but it is more important than what the price is doing. So, yep, just if you didn't understand that before, now you do. Okay, great. Okay. Another thing I really think you should make a habit of is reading every day about cryptocurrencies. And maybe you're sick of them at this point, and maybe you want nothing to do with them. But the fact of the matter is, cryptocurrency and really the emerging technology front that we're seeing right now, AI, machine learning, all this stuff that's coming about right now, Internet 3.0 or whatever. It is all sort of a mesh of technology, this new renaissance. And I think cryptocurrencies are definitely an important facet of that. And I think they will continue to be so in the near and long term. It's definitely the rhetoric people always use is the internet in the early 90s. And yeah, that's very true. But I think it goes much more than that, because it's not just about the technology itself. It's what people are doing with it, and it's what they're being inspired to do because of this sort of change, this disruption energy. I think that is what cryptocurrencies view in people is the need to improve, evolve. It's that's what gets me excited about cryptocurrencies. It's not just about, hey, we're new world currency, hey, we're sticking it to the middleman. No, it's much deeper than that. It is this sort of new energy that is coming about, and it's this new technological front and wave of, I could keep going on this, but you understand that, like, this is a space that's going to be continuing to evolve. It's something that I believe you should stay informed with, even if you don't want to be a, big investor in it. I think it's still something you should be aware of, because it's like the internet in the 90s is going to become something that is, part of our lives. And if you can stay on top of that, that puts you in such a better place in terms of being informed, and understanding the trends of things. So, yeah, it's definitely, we're still kind of transitioning out of the, Satoshi's white paper is coming up, the 10-year anniversary, and what it, first 10 years that's been of cryptocurrency, and I can't wait to see what it's like 10 years from now. But the thing is, it's definitely, we're still transitioning out of that nerd money phase, and it's going to take some time. And there's definitely going to be challenges and hills to climb, and there's so much to do, but it's still so exciting to be a part of. And so, yeah, I highly encourage you to stay informed with it. So, moving along, know when to take a break and when to walk away. And I think this is something, kind of counter to the last point, is you got to understand when it's starting to affect you, and it's starting to affect your mental, state of mind. And, I can definitely understand after the past 10 months that it has been hard for some people, especially those people who bought in January or February. My heart goes out to you guys. If you've stuck around this long, awesome. That is, very commendable. But yeah, it is definitely, this is definitely a space that is tough to be in if you have made investments with money that you can't lose. And, I know it goes back to those early rules, but if you've already done that and, you're down 85% on your portfolio and you're wondering every day, are you ever going to be able to break even again? I get that. I get that it's tough. But the sun will come up tomorrow, guys. This space is not dead. In fact, it's growing faster than ever. We are getting awesome news basically every day, and we are getting closer and closer to seeing sort of the utilization and the adoption of this space. And yeah, maybe that's going to be 5 or 10 years away. Whatever. It's going to take time, but it's coming. And so, if you're down, or if this space is affecting you, yeah, definitely learn when to walk away. Or on the flip side, if you are up and you're doing great, and maybe it's time to cash out a little bit, and learn when to do that too. So definitely have a plan for when things go either way. That's something I've said multiple times in this presentation, so hopefully that point has stuck around. Okay, another thing I really recommend, especially as you go forward with this space, is to surround yourself with a good community. And this has made the world of difference for me. Being able to talk to people, being able to understand things that, or see things that I had never seen before, or look at it from a perspective that I had never, considered before. Super important. Super, like, it will change your mind, make you so much more informed. And really, like, those times when people say something that, like, totally, just blows your mind. It's like that's fun to be a part of, especially if you can be a part of a community that is very, supportive, is really good at, like, sharing information and, helping you out with questions, and, just making sure that you're continuing to learn every day with this space, because there's so much to learn. I totally get it. It's the learning curve is very steep. But yeah, it is so important that, you have a good community surrounding you. We've started to really build a community with ReadySetCrypto with our premium members, and it's been awesome. I love getting in our Discord every day and, talking to people, and it's fun because, like, we're sharing stuff every day, and it's great to talk to people who, it's not about pumps and, like, chasing coins or anything like that. It's much more than that. We're sharing information about, like, hey, check out this cool article about, what just happened about this regulation, or, this exchange just did this, and there's so much more than just price in this space. And I hope that you see that, and that you understand that this space is much more than just a dollar sign. There's so much, it's so much deeper than that. So yeah, definitely, I would definitely recommend getting a good community, and you know getting involved, like talk to people. And so that comes to my final point: have fun. This is like the thing that I have to constantly remind people, but it is so important, especially with this space, because crypto can be the worst thing in the world, but it can also be the best thing. And it is so much fun to, be involved with it, and like talk to people, and, just make it your mission to learn more and grow as a person, as learn more about the space, but also learn more about yourself. And it can be so much, you can get so much out of it if you're willing to put so much in. And I think a big piece of that is having the right mindset and attitude, and just trying to stay positive about things. I know that there are so many days when it's just like, the market did nothing today, or man, it really went down and this sucks. And man, that coin, geez, why did I invest in that shit coin? And there's so many things that can get you down, but at the same time, there's so many things that can bring you right back up. And so I think this space is really easy to be emotional in, and it can be really dangerous if you don't learn to channel your emotions in a constructive way. So guys, definitely, watch out for yourself. It comes back to the point about when to know when to take a break, but also know when to have fun, know when to cut loose, and like, just enjoy it. Like this, you are in before so many other people. You have the opportunity to be in, the 0.01%, or whatever, of a space that is going to definitely influence the world and the economy and technology and all these other things. You have the space, chance to be in first, and to really influence things. So actually, I would highly recommend that you get involved. Go to conventions, or go to meetups and talk to people. Even if you're not like a developer, or have a technology background, you can still definitely be involved in the space, and still definitely be participatory, and give back to it, and help grow it. It definitely needs people like you to help push things along right now, because it's in such a fragile state right now. And I think nobody really knows where it's going right now, but I think definitely everybody can pick up on the sense that this space has potential. That's why we're here. So hopefully I don't have to keep going on at this point, but definitely like learn how to have fun. It's there's so much to this space. There's so much to learn. There's so much to get involved with. So yeah, I love being a part of this every day, and I love talking to you guys, because there's so much to it. There's like, it's just, we're here, and we're gonna make the best of it. All right, so that is my 20 points, 20 tips, tricks, whatever, of getting involved with cryptocurrency. And so before oh geez, I got some extra slides, sorry about that. Before I get to your questions and answers, I do want to share one thing, and that is my new class, where I sort of put this information into a format that's a little bit more digestible. It's videos, and it's going to be PDFs and quizzes, and we're also going to have a coaching element. So if you need help getting started with this space, if you need help understanding how to get in, buy cryptocurrency, how to transfer it, the basics of just, a lot of the stuff I talked about tonight, just sort of the mindset of things, this is for you. This is, we're updating, this is sort of our beginner class, because we understand that there's a need for, really just, no BS introduction to cryptocurrency. Basically, what I start the class doing is telling you what you don't need to know. And I think that's very unorthodox when it comes to beginner guides, but this is the class, this is the guide that I wish I had when I got started with cryptocurrency, because I remember looking around on Google and saying, how do I make money with cryptocurrency? Because that's what you Google. And gosh, like the first 20 guides were just garbage. They were just, they told me nothing what I needed to know. It was so frustrating to me, because, all I wanted to do was learn how to invest and get started. And they're like, no, you need to go set up a wallet. No, you need to go, learn about mining and how blockchain transactions work. And okay, that's all really fun to learn and understand and cool. And definitely like step number 50. But step number one is like, how do I just get started? Help me get started. So that's what I'm addressing in this class. That's why I made this class, is because, I want to speak to those people out there that are kind of frustrated or just kind of need it all in one place. And yeah, definitely, I think the coaching element is sort of the cherry on the top to say, we're going to have this group coaching session where it's going to be 4 hours split into 4 different sessions where we just, take questions and help each other out. And, it's going to be awesome. And this is not the last time I'm going to be offering this class and coaching session. So if you get involved with this today, you'll be invited back to coaching sessions when we do them in the future. So there's definitely a redundancy and, just continuing to learn, and there's a lot to it. So, that's why I'm excited to offer you guys this. And what's cool is that for the first, couple days that we have this on sale, it's going to be half off of the retail price. So it's going to be on sale for $158 tonight. If you're one of our premium members, you can use our coupon code and get the $10 off. The other thing is, to get it, it is not on our store. So you need to go to ReadySetCrypto.com/bootcamp to, buy it. You can use cryptocurrency. I definitely make sure that you can do that. So you can use Bitcoin, Litecoin, or Dogecoin. And I'm very excited about that. And if anybody pays me in Dogecoin, awesome. I thank you. That just makes my day when that happens. So, but yes, it is ReadySetCrypto.com/bootcamp. It is, it's going to be fun. It's going to be sort of this sort of format where you're going to be learning, but I want to make sure that we're bringing it back to the fundamentals. So, definitely let me know if you have any questions about the class. Reach out to us at support@ReadySetCrypto.com. Another thing is we also have sort of a bundle. So we also, I targeted, if you kind of want to take this to the next level when you get started, there's also a bundle of the boot camp with the coaching, but also our intro class, which is kind of the old version, the one that we did earlier this year, and the intro to fundamental analysis class with the portfolio management class as well. So normally all of that together would be $515, but for until the end of the weekend, it's going to be $249. So to get to that one, again, it's not on the store. It's ReadySetCrypto.com/begin. So yeah, let me just oh, and then it's $10 off with the coupon. I always forget to mention that. So sale's only good for this weekend. Definitely don't wait until it's wholesale, because if you guys have been around before, you know that like once we take off the discount, it is gone. So yeah, definitely get on that. So, okay, that was 53 minutes. Oh man, I kind of went overboard. Sorry guys. But that was fun. Thank you so much for sticking around. You guys are awesome. Thank you so much. All right, so let's take some questions. Let's see. Do you recommend setting strict oh yeah, so this is a question about do I recommend setting like strict stop losses, or being very strict about it? And it comes up to you. It's really up to you. Maybe when you get started, you can set stop losses on whatever exchange that you're on. But as you develop, maybe you get a little bit more relaxed, or you have progressive stop losses. It's up to you. It's part of your strategy. What I would recommend getting started, probably just, try something simple. Just feel it out and say, this is what I'm going to do at start, to begin, setting stop losses. But the thing with crypto is that it's so volatile that you don't want too narrow of a spread on that. So just be aware of that. Let's see. Let's see. Ethereum or EOS? Guys, I was talking about this earlier, let's see. There is definitely a need for you to make sure that you're hedging your bets. And okay, how I feel is Ethereum is in its place and it's done, big things, and it is working on these big changes like sharding and Casper. But EOS is doing other stuff too. It's not my favorite project, I'll be honest, but it's still doing things. And I'm not going to say whether one's better than the other, but they're definitely both, big infrastructure projects that will definitely push the space forward. So it's too early to say which one's going to be better, because yeah, there's a lot to it, and we can't really see how this plays out until it does. So yeah, that's sort of the PC answer, but we'll have to go with it. Let's see. How big of a volume? Yeah, so how big is volume when considering to go in on a low cap project? That's a really good question. Um, it is kind of important because, what I've found is if I try to get in a low cap project and there's no volume, then there's not much to talk about. There's not much interest or trading activity, and it's even hard to get, a buy order in. And sometimes you'll see, just these tiny projects with no volume. And yeah, it's I like to see more volume on projects, even when they're low caps, for the ratio to the market cap. You can definitely play around with that as you see fit, but definitely the more volume, the better is basically how it goes. Let's see. What exchange do you trade on? I typically use Binance. I've been on Binance since day number one, and I remember getting BNB when it was 25 cents. That was kind of fun. But yeah, Binance works for me most of the time. Sometimes I'll go to other exchanges like I don't know, KuCoin is it's okay. Bittrex is doing better. I don't know. I've been using Mercatox recently to pick up some Digitex. It really depends on where the coin is that I want. And unfortunately, that's kind of the nature of things. But thankfully, most coins out there are going to be ERC20 tokens rather. So once I acquire them on whatever little crappy exchange they're on, I can transfer them into my Ethereum wallet and my Ether wallet. And yeah, then I get them off that exchange. They are much safer in my Ether wallet. Let's see. Do I hold Tomo? I almost did. I almost got into that one, and I think it just pumped today, or maybe it was yesterday. That one's interesting. I'm gonna hold off and make sure that it's they've got some stuff coming up. They've got some targets for Q4. I think their mainnet is launching in Q4. Don't quote me on that, but I think they're either launching Q4 or Q1. So that's exciting. And they seem to be doing a lot of cool stuff. So it seems like it's the flavor of the month right now, along with Ravencoin. I see that one. But I like to take a wait and see approach and really take my time to do the research on it. So yeah, let's see. Do I own XRP? Not at the moment. Doc does, but not in my personal portfolio. I've been in and out of XRP a couple times. It basically with XRP at this point, it's next like 12 months we're gonna see a conveyor belt of XRapid signups, and that's cool. There's I can't fud that. But yeah, for me the biggest concern is regarding the security status of it, whether or not XRP is a security. With the signups on XRapid, that kind of does blow a hole in the argument that it is a security, but ultimately it's up to the SEC. And so I just want to kind of take a wait and see approach. And if they do come back and say that it is not a security, awesome, great. That's very cool. Let's see. Am I holding Digibyte? No, I am not. Let's see. Take a couple more. Questions seem to be kind of slowing down. Where's Doc? See the market cycle. PundyX is cool. I think they've got a couple things coming up as well. But that's definitely one I need to do more due diligence on. They seem to be all over the place, so that's pretty cool. Why do I ignore PIVX? Well, let me talk about privacy coins in general, because PIVX is not a bad project by any stretch of the imagination. In fact, I've talked to some of the team members from PIVX, and they're pretty cool guys. But privacy coins, unfortunately, I think are kind of at odds with a lot of governments of the world, because when you break it down, the power of a government is derived by its ability to collect taxes, and unfortunately, anonymous transactions kind of are, go against that. So, yeah, no, privacy coins are they're an interesting bunch for sure, and Pivx is definitely one of the more interesting ones, I think. I definitely, if I could, I would get a masternode with Pivx, but I think last time I checked, it was pretty expensive. Whatever. But it's definitely something that I'm a little bit more focused on, like platform coins and like supply chain coins and things like that. That's just kind of where I focus on, and I just kind of held off on privacy coins because I'm a little bit afraid of what's going to happen in the next 5 years with them. But don't get me wrong, they are still trucking along and they are doing a good job. So yeah, let's see. Litecoin is the right coin. Hey, I will say the Litecoin Summit was fun. Yeah, that was a good time. And Charlie Lee is a cool guy. He's very smart. Let's see. I'll take two more questions. Is it wrong to be against the grain and think market cap is really a useless metric? That's a great question. And yeah, I actually share that opinion sometimes because when it comes down to it, how do you evaluate, apples to apples, something like Ethereum's market cap versus Bitcoin's? They're trying to do two very different things. So to, lump them together and say, oh, well, Bitcoin is better because the market cap is higher. That's kind of disingenuous because they're trying to do very different things. So that's where I think you're right. I think that market cap is sort of a useless metric in some respects. Unfortunately, crypto is just by its nature kind of a hard space to value things. We don't have the same sort of metrics we see in like the stock market. So you definitely have to find different ways to value things. And unfortunately, market cap is one of those things that we can definitively say, oh, that coin has more market cap than that one. So that's kind of why people use it. But for me, I like to see more user activity, more nodes. I want to see more developer activity. I want to see them getting partnerships, all that stuff. Way more important than market cap for me. But unfortunately, just kind of where we are in the space with crypto. Market cap is just used. Coinmarketcap.com is like the number one site because that's what it is. So, anyways, sorry. Let's see. If I could look 5 years into the future, what would I like to know the most? That is a really good question. I really like that question. Okay. What I would like to know the most. Oh man. Okay. Definitely, I think the biggest issues related to crypto right now, on the technology side, is related to scalability and just usability. And I think if I were to look 5 years in the future for the technology side, I want to see us sort of to coalesce around certain things, certain paradigms, and find ways to solve scalability in a reasonable format. There's a lot more, a lot of other issues that we need to solve. But I think that, finding ways to solve the scalability and also finding ways to solve the user experience, and basically do it in such a way that, we get all the benefits of the old system, the conventional financial system, while adding on all these other benefits of the blockchain and distributed ledger technology as a whole. So that's what I want to see. But beyond that, just like regulatory, acceptance and regulators working with blockchain. I want to see more adoption and better use cases. I just want to see stuff start to expand and really 5 years from now, I think it's going to be very different from what it is today. I think that's what I don't even need a crystal ball to say that. So, okay. Why is the sign backwards? Oh, jeez. Okay. Backed versus Fidelity. Yeah, sure. How big is Fidelity? That's a great question. Fidelity, to my knowledge, is the number one issuer or manager of 401ks in the US. It's definitely one of the biggest investment firms. And um, yeah, I think it was absolutely massive. Probably one of the biggest announcements of this entire year for Fidelity to come out and say that they're going to be offering a crypto trading platform. That's awesome. There's so many things to that that are going to be great, especially when people are, able to take retirement accounts and allocate them towards crypto because they want to diversify, especially as we're starting to see instability in the stock market. I'm not a doomsayer with that, but I will say that people are starting to see crypto as a new asset class. And I think Fidelity coming on board and saying the things that they did really legitimizes that and really brings that point home. So, yeah, that was a very big deal, and it's going to play out. It's going to take time for them to roll out, just like Backed, just like TD Ameritrade's Eris X. But these things are coming. That's the most important thing I can stress is that these institutional investors are going to be coming on board with these custodian and exchanges, and there's a lot of things going on right now that it doesn't reflect in price right now, but it's definitely, the market is definitely maturing, and we're definitely seeing a lot of good things happening right now. So that's awesome. Okay. Yep. All right. I think I'm done with questions. So let me wrap this up here, guys. Thank you so much for watching. I really enjoy doing this stuff with you. I hope you learned something. Thank you for taking time out of your weekday to sit down with me and learn some things and talk about crypto. I always enjoy doing this. It's such a pleasure and such an honor. So again, thank you so much. Like I said, definitely check out the class. ReadySetCrypto, ReadySetCrypto.com/bootcamp for the class. ReadySetCrypto.com/begin, and then ReadySetCrypto.com/shop to check out all of our other classes. So, and then we also have our premium newsletter, which is a really awesome thing. It's not just a newsletter. We are building a community around it, and we're doing live streams privately for those guys. So definitely get on board with that if that sounds interesting to you. But anyways, thank you so much for sticking around. I really appreciate it. My name is Mav, and this has been Ready Set Crypto. Have a great night, guys. Cheers.